happens. So, okay, great. Well, thank you guys for joining us, and especially I want to thank Ethan for kind of putting this all together for us. As you mentioned, yeah, we're not having the EDC real estate forecast today, so I guess we're kind of getting the low rent forecast today from you guys from COVID land. But yeah, I appreciate you taking the time. So I thought maybe we just kind of do some quick introductions. I know you guys kind of know each other. But I'm Gabriel Dillard. I'm the editor of the Business Journal. One of my reporters, Edward. Edward, you want to introduce
That's me. I'm Edward. I'm covering real estate. A little bit new to this, so yeah, I'm Edward.
Great. I don't know. I'm wondering if you guys have the same order of people that you see above your screen, or if it's. I'll just call out names, and maybe if you could just do a quick who you are and who you work for and the whole bit. So you want to go first, Ethan?
Sure. Ethan Smith. I'm a industrial specialist with Newmark Pearson Commercial. I've been in the Fresno market since 2003, and my focus is almost exclusively on industrial and logistics real estate. I've been working with Newmark and Pearson since I began in the business, and been fortunate enough to have some good clients and worked with most of the guys on the screen.
Great. Brett?
Yeah, Brett Visintainer. I work for my own investment firm, the Visintainer Group here in Fresno. My focus purely on commercial real estate. I do have two other divisions, ag and multifamily, but really the emphasis for what I do is on the commercial side, and work with industrial, commercial, retail and office properties with more of an emphasis on the retail side and 1031 exchanges. Last few years, I've gone to about over 300 million in sales in 13 different states, and close to about 100 transactions. So very active, even across the country, but focus here in Fresno.
Great. Robin?
Robin Kane with the Marabi Group. Had my own firm till 2012. Joined a firm out of Scottsdale called Hendricks and Partners. They got bought out by Berkadia. Berkadia obviously is Warren Buffett's company. They decided to pull back to core markets. So I joined a gentleman named Alex Marabi. Our specialty is multifamily. We operate from the home office is concentrated in Costa Mesa, and they focus on the Inland Empire in Southern California. Our office in Fresno focuses from Bakersfield up to Chico, so basically the Central Valley, a little bit of the Central Coast. So been doing this for a while and been through a number of these cycles.
Like this one?
This one, the 09, the 99, and even as far back as the 88 S&L crisis.
Not the Spanish flu?
I think I just was born right after that.
That was a good one. Matt?
Hi, this is Matt Renney. I'm principal at California Realty Capital in Fresno, California. I'm a commercial mortgage banker. I've had my own firm for almost 7 years and worked for another firm for about 8. My firm places financing for investors, developers, and business owners with life insurance companies, Fannie Mae, Freddie Mac, regional and local banks, and just a few other types of lenders out there, debt funds and private lenders. I've been in the business a while and definitely was here in 08, but not back to the ones before that Robin mentioned.
Brandon.
My name is Brandon Lamonica. I'm with Fortune Associates Commercial Real Estate. My emphasis is in mostly in the office sector. Specialize in sale and leasing of office buildings, development of office projects. And we also do some investment work as well. Not as much as Brett, but we get it one here or there that we get to do. Been in the business since 2001. All my years have been with Fortune Associates. I'm coming up on 20 years, so been in the business a while, and looking forward to having a nice little chat with all you guys.
Great. Last but not least, Michael.
You guys can see me, but not, you can hear me, but not see me, correct?
Correct.
All right, we're still working on that. My specialty is retail. I've been doing it for 20 plus years. I remember when Brandon got in the business, so it's been longer than him apparently. Specialty is shopping centers, landlord, and tenant representation. Started retail California in, I want to say, early 2000s. And currently have worked with Brett and Ethan as well.
Great. Okay, well, thank you. Got that out of the way. So I don't want to take up too much of your time for this kind of first shot at our Zoom conference here, at least with the Business Journal. So I just wanted to give each of you guys maybe a couple minutes to talk about what you're seeing specifically in your world, as far as from this month that we've all been kind of shut down, and just kind of go through the room, and then if you guys are open to maybe having some follow-up questions thrown your way, and then probably call it a day. And we're looking forward to sharing this with our readership via probably put it on YouTube or something like that, and then also looking forward to kind of recapping it for next week's paper. So so I guess if we could just start through the rotation again. Well, let's see. So I have Brandon first. So Brandon, do you mind? Maybe
I don't mind starting. So all the pressure's on me, so we'll get this going. But, essentially where we've been over the last, we'll call it 30 days since I think the ordinance that stays home ordinance went in on March 19th. We've obviously seen a dip in activity level, and I'm sure that's pretty consistent across the board with everybody. Obviously, people are spending more time worrying about taking care of families and their businesses than worrying about acquisition or relocation of an existing company or investment. For us right now, what we've been really mainly focusing on, and the majority of the work we've been doing was one, finishing off deals that were already underway, helping clients get moved into new facilities or close escrows, which we've been able to do, and the market still allowed us to do that with the title companies being open and being able to do e-filings and things of that nature. So we haven't seen any real let off their issue as far as trying to finish transactions. Contractors are still working, so we're still able to get improvements finished. Ethan and I have a job going right now that's getting pretty close to being done. So, it's we haven't seen any slowdown there on stuff that was already in the pipeline. As for new activity and things of that nature, it's definitely obviously fallen off. And, we've been reaching out, and most of our conversations have been very specifically driven between landlords and tenants. Lots of tenants calling and asking what options they have, or being able to try to have some discussions with landlords about trying to defer rent, or, what does the new ordinance mean, the emergency ordinance, and what does that mean for non-essential businesses and the payment of rent. So a lot of it's been education. I know our firm's had multiple Zoom conferences just talking about these particular issues, and what advice and where we can refer clients, whether they be tenants or landlords, and try to advise them on how to, obviously we've never gone through this, but trying to do the best of giving them advice and trying to, manage our way through this process. I think the thing that's a little bit difficult with not knowing when it's going to end, and when people can go back to work and businesses can reopen, I think that's the real challenging part right now, because, you're trying to make a decision without knowing when the end's going to be. So, from a landlord perspective, it's like, well, if I give them, defer rent for a couple months, what happens if this goes for another 60 days past that? So I think for the most part, most landlords are being understanding of the situation and trying to work with tenants, especially the ones that are non-essential and can't operate. It's a little more challenging situation with tenants that are essential, that can still be open for business and work, but obviously aren't probably doing the normal revenue stream that they would currently see, or they were prior to this being, the outbreak happening. But as far as the things that we're hoping to see is that, one, I think everybody would agree that we hope that this, we can get out of this situation sooner than later. And also providing a lot of information to our clients on financial options, as far as, referring them to the PPP loans, which has been most popular because it's a forgivable loan if it's used correctly, and putting them in touch with lenders and the right people, and making sure they have the right paperwork so that they can help try to apply for those loans and sustain their businesses during this down cycle.
Great. Okay. Ethan.
Sure. So I think that my experience over the last 30, 45 days is similar. My focus being on industrial, it's a little different. Most industrial businesses are deemed essential, from construction related firms to manufacturing, food production. So really, there's not a sort of wide there's not a lot of industrial businesses that are truly shut down. And the perspective that most industrial businesses have been taking is that they're really focused on employee well-being and modifying their operations to reflect either local or state requirements regarding social distancing and how they have to keep their employees healthy. Whether that's from an Amazon, which I've been fortunate enough to work with here in Fresno. They actually had a fire at their building last week. But, to some of the smaller businesses that are focused on even book publishing, where they have employees working from home, but they still have a warehouse manager who's receiving UPS, FedEx, Amazon, they're all still delivering, and those are all industrial related businesses. So it's been a little different in terms of the kind of conversations we're having. There are certainly conversations occurring between landlords and tenants regarding rent relief, rent deferral. However, they're just a little bit different because most industrial businesses, especially those that are tied to e-commerce, are actually doing pretty well right now. So it's, I don't want to say falling on deaf ears when a tenant comes to the landlord and says, hey, look, I need you to defer my rent. The world's a bad place. We don't know when all this is going to end. Landlords are pushing back a little bit on that, certainly on the industrial side of things, because it feels a little opportunistic. I mean, we're only 30 days into something that we really don't know where the end is, and we don't really have a good sense for what the implications are. Which is a little different than the financial crisis, where we were really very, very focused on lack of liquidity, and you could see what the banks were going to do. So there are some different trends going on in industrial, and big picture for industrial. I would venture guess to say everybody that's on this call has received an Amazon package in the last 30 days, maybe daily. I think that the calls that I've been on over the last couple of weeks, I think consistently the feeling is that all the trend lines towards shopping at home and having things delivered to your house or your office have really been pushed forward. In fact, a stat I heard yesterday, one of the larger national developers that does a lot of work with UPS and Walmart, indicated that by their estimates, they were predicting around 500 million feet of warehouse space would be required over the next 5 years to handle e-commerce requirements. They think that's going to be pushed forward to somewhere closer to 1 billion square feet, just as a result of the fact that people are likely to continue to shop, albeit not as much as they are today, online. So they're predicting, and these are national numbers, not specifically to Fresno. So these are pretty smart people, and that seems to be pretty consistent across the board. So there's a feeling that industrial real estate in the near term will deal with challenges, but the medium and long term for industrial, albeit, or whether it's a fulfillment type of project, e-commerce related, and then even the manufacturing side of our business, will actually ultimately increase the inventory across the board. And that really doesn't account for the likelihood of onshoring or reshoring of critical manufacturing. I think it's a given that manufacturing of pharmaceuticals, medical equipment is coming back to the United States. I've seen several requirements come through that are already addressing pharmaceutical manufacturing in the U.S. Companies looking for facilities with the expectation that albeit whether it's a government regulation or it just simply makes better business sense, they're going to be manufacturing more pharmaceuticals in the U.S. And the final thing I would point out is the term safety stock is used on virtually every single call that I'm on, whether it's with a tenant or with a developer. The idea that companies have really relied on just-in-time inventory, and the term I heard yesterday was just-in-case inventory is going to be making a comeback, which really what that's saying is that a company that would typically rely on receiving components or supplies on an almost daily basis will now inventory critical supplies and components at there'll be more volume of that in their warehouses. And the estimate that I heard yesterday, just at a conservative level, is if you took 5% increase in quote unquote safety stock across the industrial sector, it would translate to almost 1 billion extra square feet of warehouse space required to accommodate that. Again, these are kind of national numbers, but just gives you the sense that warehouses are going to be fuller and there's going to need to likely be more of them. So coming out of this, the industrial sector probably benefits from some of these trend lines that are just getting pushed forward.
Interesting. Brett?
Yeah, I think on the investment side, we've seen a lot over just the last 30 days with changes where, deals just are drying up. They're falling apart for all different kinds of reasons. If it's financing, where lenders just are choosing to not proceed with deals. If it's because of the extension on the 1031 ID period and clients just saying, I'm going to back out because I want to wait and see, the whole wait and see mentality. The other, just people backing out just to pay their taxes. All of it is driven by the one thing, which is the unknown. When is this going to keep going? The idea of opening, what does that really mean? Does that mean just because people are told to go out, are people really going to go out? And how is that going to impact the restaurants? How's that going to impact the shopping? And with that comes uncertainty from investors of, what are you going to take and look on a rent roll and see, okay, who's really going to be paying rent? And if are they going to be paying full rent, half rent, or, just expenses? How do you value that? I know this is a conversation I've had. I talk to Matt all the time. We worked on a few deals, and unfortunately we were on the wrong side of one where we had multiple lenders we had a deal in Vegas and Dallas, and we were working on 2 retail centers. And, at one point, Matt can go into this a little bit more, but, the lender just said, if we don't get clean estoppels, then there's not a way to fund. That's not going to be possible. So you start realizing once the lenders start freezing up, that trickles down into the investors and their ability to make decisions. One thing, and I've talked to Matt multiple times, and I've talked to brokers across the country, is how are you guys underwriting right now? How are lenders underwriting? What is going into the process of putting a value on a property? And I'm told the same thing is we don't know. We don't know. And so that's scary, because you could take a rent roll on a property and say, okay, this is what you should be getting. But by the time everything comes back to essentially what would be the new normal, is how many of those tenants are going to be paying those rents, and how many of these tenants are still going to be there, especially on the local levels. And that's what's making the investment side really hard right now. I think everybody who had deals in the pipeline that were getting done in March, they saw all those come together, and a lot of the lenders that were already committed were able to probably go through with those loans if it was far enough. But in terms of new opportunities, when you don't have lenders that are able to make decisions on mostly what I'm talking about, multi-tenant assets, especially on retail and office, I think industrial still has the demand, and it continues to be a strong investment class just because of a lot of the things that Ethan said. But when it comes to multi-tenant investments, it's really hard right now when we can't get answers really, and there are answers that I don't expect anybody to have because it's so unknown on how to, put values on properties in today's climate. And it's also new that nobody knows what it's going to look like in, 3 months, 4 months. And really seeing how lenders are getting creative with some of the things Matt's told me on holding reserves back, doing different types of things with principal interest or, holding it, if it's NOI or whatever it may be to protect themselves. But is that because they're doing that because they're already moving forward in deals, or are they just going to freeze up completely? That's the hard part right now for investors. In terms of all cash, even the people in exchanges, they're having to make that decision. Is it worth me, paying for a property that potentially may not be worth what I think it's worth today? And I was just told today by somebody who was talking to multiple lenders that they thought the value of this property they were looking at was going to be, 20 to 30% less in 6 months. Well, I mean, okay, I don't know how you could be so definitive on, evaluation, but that's coming from, people that are supposed to be, putting money out there. So I think until investors have a little more confidence in where we are with all of this, I think it's going to be that, wait and see mentality. There was a lot of cash on the sidelines already waiting for opportunities. And I do think there will be a lot fewer deals in the second quarter than we've seen in a long time, just as people try to figure out, I don't even know if figure out is the right word, but at least try to figure out what the sentiment is going to be moving forward and who's going to be around. And really is how do you find a value for properties moving forward throughout 2020? And, that might just, have to take some time and kind of figure out what's going on. Otherwise, Ethan will just be doing all the investment deals and industrial. So, but overall, I mean, we were on a great pace in that first quarter, and it turned pretty fast with everything that happened.
It's my intern.
What's that?
It's my intern.
Oh, that's your intern? Yeah. You need them over there with all the deals you got. No, but I think overall the investment market, like I said, I think it's just going to be that wait and see mentality. Let's figure out how to kind of stomach all this. Let's figure out how to value. Let's see who comes back. We need to get people out there, and once everyone feels safe, for us to really see who's going to be able to stick around. And it's going to be tough for a lot of these companies. But the other thing that's hard is a lot of these investors, they thought, oh, we have these national companies, they're going to keep paying because they have deep pockets. And a lot of my investors, I think Brandon was saying it, and talking to them about how to work with their tenants and go get through this. And, you're getting these national letters that I'm sure Michael's seeing left and right, where I just got a client today told me Red Lobster said they're only going to pay 25% of their rent for the next 7 months. Caliber Collision just said that, for 40%, they're going to pay 40% less rent. You have national firms that are just saying, they're not even talking about deferment. They're not even wanting to talk to you. They're just saying, we're just going to give you X. And that becomes pretty hard for investors to negotiate. And that's impacting their ability to pay their mortgages. And so again, with the lending side of it, that's going to be a big impact to a lot of these property owners as well, when a big part of your income is coming from national tenants who just are deciding to not pay. Cheesecake Factory, what'd they say? They're not paying rent for any of their locations across the country. So you start looking at all this, and it starts making it tough on investors overall with, making decisions and understanding value. And if you need a loan, that's going to be really difficult in the coming months until we see some more certainty in the overall economy.
Maybe that kind of dovetails into Matt, kind of what you're seeing out there.
Yeah, so I mean, Brett's absolutely correct right now. I think there's just more questions than we have answers. I think the biggest question that anyone that owns commercial real estate right now is whether or not their tenants are going to be paying rent come May 1st. I think, looking back over the last 30 days, the majority of folks paid their rent April 1st, and the majority of mortgages were also paid. But I think looking towards May 1st, when rent's due again and mortgages are due again, you're going to be, over a month into the shutdown. And that's going to probably be a huge telltale sign of where we're at or where we're headed. I mean, obviously, I'm hopeful that we're going to be heading, back to getting people to work and, services open and stuff. But I think that's the bigger question facing us. And I think the lenders, what they're facing is just whether or not these properties are going to collect enough income to service the debt. So I kind of put together a quick summary on each lending sector as of today and where they're at. So the commercial mortgage-backed security market and their lenders are currently out of the market, as there's just really no secondary market for selling the securities right now. Life insurance companies, they're still seeking new loan opportunities for strong performing, low leveraged assets in solid markets. I mean, they are not looking at hotels by any means. The agencies, which are Fannie Mae, Freddie Mac, FHA, and HUD, are all active in the multifamily sector, albeit they have additional reserve requirements that Brett kind of touched on, but basically they're putting in an additional reserve right now for maybe 9 to 12 months in anticipation that tenants aren't going to pay rent due to the pandemic. And then I think banks are still active with recourse, but they're taking measured steps to make sure their lending decisions are prudent. Over the last 30 days, I think most lenders have been focused on closing deals in their pipeline and working on pre-negotiated forbearance terms in anticipation of owners asking for principal and interest relief. Some of the stuff that the lenders that I work with have talked about is moving deals to interest only for a period of time, or delaying 3 months of payments to the end of the financing term. It's all still kind of a work in progress, and most lenders are going to expect you, if you ask for relief, that you prove out that you need that relief based on what you're going to be collecting or anticipating to collect in May. I mean, I think some of the good news, if there is any, is that 1031 exchange timeframes have been extended. I think the market as a whole is better prepared for this downturn, because I think the underwriting standards have been much stronger since Lehman crashed in 2008. I mean, I think we're seeing some states attempt to kind of resume some economic activity, like Texas, Georgia, I think Tennessee, South Carolina are on that list. And I think lenders are still active, but they're asking more questions and they're being more conservative in regards to their underwriting.
Okay, great. Mike, what are you saying?
Retail getting crushed right now. A few of the retailers are doing okay, but as Brett mentioned, many of my landlords that I've spoken with the last 3 weeks, all their time has been dealing with, rent deferrals, rent reduction requests. Basically, in the retail market, our deals are just on pause right now. The national tenants are not wanting to do new deals. There's so much uncertainty that they're just putting everything on hold. I still have a few deals that are plugging along, kind of going back and forth through the lease negotiation process with attorneys. But at the end of the day, we don't know if they're going to get signed or if it's just kind of attorneys staying busy right now and hoping that they get signed. Just a lot of unknown. The typical thing we're seeing from tenants has been between 2 to 4 months of rent relief request. It's more of a deferral. I have 1 or 2 landlords that in April decided to just do abatement, but by far and large, it's just been extending the term. One of the common themes landlords are trying to do is, we'll give you a couple months free. You need to repay that back, in the next 6 months, trying that approach, trying to work with them a little bit. As Brett mentioned, all the letters coming, I had a couple landlords that were a little upset that 1 week into this, they were getting letters from tenants telling them they're not going to pay. And they're like, well, how do you know you're not going to pay? You've been in business for 15, 20 years, and now you can't make 1 month rent payment. And it really frustrated some of them, like, okay, now you want us to work with you, and you're coming out telling us you're not going to pay. I've been on like half a dozen of these calls the last couple of weeks, and there's a long list of tenants, national tenants, that have told landlords they're not going to pay rent. Gap just came out today and said, not only are you not going to pay rent, we're not going to open stores. There'll be a lot of stores that never open again. So a lot of uncertainty right now. I've talked to some restaurant tenants. They're having a real tough time. I mean, they're trying to do curbside pickups, but some of my clients said they're down 70, 80%, and they don't know if they're going to open up again either. I mean, what I'm hearing is you could have 20% of the restaurants close and don't open again. Just they're impacted that much. Malls are getting killed as well. Brett, we have a client, a friend that has a mall in Hanford. I spoke with him this week, and he's getting about 25% of his mall tenants paying rent. But they're really impacted because the malls are closed. You can't go in there. So there's no way they have no other avenue to try to create revenue and get the customers that come to their area. The other segment that's gyms. I don't know how people are going to feel to go back to gyms again, or Dave and Buster's, things like that, where you have a bunch of people in one area. How do you separate them and do social spacing? It's going to be real tough for them. There are some active tenants still. It's the dollar stores, the gas stations, the C-stores, grocery stores. They're doing better than ever. Their sales are up, 30, 40%. I've talked to some of the grocery store tenants, and it's leveling off now. But for a while there, they couldn't keep up with, keep the product in the stores that you've seen. You try to buy it, it's not there anymore. So that's getting better too as we move forward. But by and large, they're just kind of on survival mode. Been hearing as recent as yesterday and today that some states are going to start to try to open up. Curious to see how that works. I think Georgia is going to try to open up next week. South Carolina is talking about opening up on Tuesday. We'll see what California does. Doesn't seem like California's been hit as hard as some of the other states back east. Obviously, New York's just been pummeled back there. And I'm doing actually a deal with a broker out of New York, and just talking with him, the stories he tells me it's scary. If it were to come here and hit LA or San Francisco, it would be devastating for us. I guess just the end result here is just retail is just trying to survive, and landlords are trying to work with tenants. And I think the biggest thing that tenants can do is just be transparent and open, and not ask for a rent, deferral the first week. Kind of let it play out a little bit, I think is a good recommendation.
Okay, and Robin, what on the multifamily end?
Wow. Let's step back a minute and think about where we were on March 15th. We were 98% occupied, little inventory on the market, rent growth year over year, 4 to 6%, very little inventory for sale, lots of buying action. What we've seen operationally, and I think several of you guys have mentioned it, April rents was good. I've talked to all of the major owners and management companies. April rent is good, and definitely May is where they're bracing for. So we're seeing how that plays out. And if you were at 100% occupied, you're 100% occupied today. No one's moving out. No one's going to go through that brain damage to try to move to another apartment. They're all just holed up. So, what we're looking for in terms of going forward is, I think the biggest risk operationally is the political risk. There are a number of bills, 828, which is just got passed through the Assembly, and it's in the Senate. And that basically empowers the courts to reduce your rents if a certain threshold test can be made 25%. And so there are a lot of other bills that are being bandied about at either a local, state, county level that, you know, every politician is trying to jump on because they're trying to do what's right for the tenant at obviously the detriment of the landlord. So political risk is pretty high right now. It was before the virus. It is definitely today. There's obviously rent moratoriums, eviction moratoriums, so working through that. On the deal side, what we've seen is that we've probably got more than a dozen escrows, and none of them have fallen out. None of them have broken stride, but a lot of that is because they're exchanges, and they are going through. We're seeing the exchange buyers finishing up those deals. Our phone activity on what inventory we do have still for sale, we were pretty well tied up with a lot of deals, but with inventory we have now, we saw a surge of activity because, as I said before, the amount of inventory before mid-March was very low. So if you're an exchange buyer and you've got the reprieve till July 15th, and you're looking at what's on the market, and there's very little on the market. And it's made even more so because if you're a buyer, there was little inventory before, and any seller who's thinking of being a seller has disappeared. They're not a player until I'm sure the common refrain we hear is, call us in the fall, call us in the fourth quarter. This is not something we want to jump into this fire pit or mosh pit and get beat up by buyers. So consequently, the amount of inventory that we have for sale is low. So whatever we do have, when it closes, there's going to be very little in the pipeline that could be coming back in until probably this thing gets a little clearer. From the buyer side, what we've seen is, as I said, the phone is still good, but 19 out of 20, not 9 out of 10, but 19 out of 20 are exchange buyers. So when they call, you got their attention. No one's crazy enough to try to put money together and buy a new deal unless they're what they think is a good deal out there, like they're a shark. There are an awful lot of capital being formulated as we speak for opportunity funds, and they're thinking that there's going to be a lot of deals. They're going to be sorely disappointed until probably 2021, maybe the second half of 2021. The reason is the way, Matt, the way your deals have been underwritten, they have enough pad that they can take a 20% hit, right. 25% hit. Yeah, there's probably no cash flow. There's going to be some corners cut. But what's going to happen is there's a lot of weak owners out there. So they can make it a little bit. They're going to start cutting corners, and I've seen this play before. What's going to happen is they're going to start letting their properties degrade. Good tenants are going to go, I'm not staying here. And then because they're starting to let in some lowlifes because they want the occupancy and what they think is going to be revenue, good tenants are going to bail. The guy next door who just offered a cheaper rent, and he's got the deep pocket to do that, he's going to take those good tenants away. 6 months from now, that owner is going to be in a world of hurt. And lenders, Matt will testify to this, aren't going to tolerate it because they've seen this movie before as well. When you have an owner who's in trouble and he starts seeing that property go downhill, he's going to do a loan review. He's going to check to see the property, have a broker either formally or informally go out, check the property. And that lender is not going to let that property deteriorate because that's where they got in trouble before. So if they see things aren't being taken care of, things aren't being done, they will shut that guy down as quick as possible. So those opportunity funds will find opportunities in probably the second quarter of next year because it's going to take that time to unwind. So I think buyers are looking for opportunities. So deal flow for the second half of the year is going to be suspect at best. You know, we're happy to close the deals we've got, but we clearly know that owners aren't going to do anything until this picture clears out. I just had a good conversation with an appraiser in the way on LinkedIn, and basically the way we see it is, think of it like a fire loss. You had 80 units and 10 units burnt down. Okay, whatever loss of income and cost it is to get those 10 units back up, that's something you have to just bake into the deal. But you don't capitalize that loss. You don't take those 10 units going forward for ad infinitum and take that percentage off the deal. So whatever losses you have in the month of May, June, July, and a portion into whatever further months didn't impede a good property's fundamentals. So the way we see it is you figure out how you're going to adjust for that loss, but in terms of the amount of inventory, we never had a lot of apartments to start with. We had a lot of demand and rent was good. So we worked through this. You work through the loss, and then we'll see how we come out the other end. Now, that still doesn't adjust for the owners who are weak. And so when those weak owners go under opportunities, there's lots of money who were sorely disappointed in the 09 market. And I think that they'll have an opportunity next year. Not as much as I think, though. So we'll see.
Great. Well, I think we have a few more minutes. If you guys okay with some follow-up questions, Edward, do you have any?
Yeah, I've got a question for either Matt or Brett. A lot of property owners are wondering what relief is coming to them. Have banks been receptive to forbearance, deferment, or abatement requests?
Go ahead, Matt.
Yeah, the answer is yes. I mean, I think all lenders are looking, they're open to it. I think the thing is they expect to have some detail behind the request. A lot of folks call and say, look, my tenants aren't paying rent, but you sort of have to drill down and find out what percentage are paying rent and are they collecting enough income to make their P&I payment. Most lenders are going to expect you to make your principal and interest payment if you are collecting enough rent to make that payment. I think a lot of owners would like to also get their monthly distribution out of an asset right now, but a lender, a first deed of trust lender, doesn't see it the same way. They see it that they expect to be paid first, and then, you know, if they are unable to be paid or if there isn't enough rent being collected, then they will offer opportunities for forbearance or deferral. Most lenders have what they call a pre-negotiation letter, or I would say the majority of them do or almost have it, where if you ask for, you know, a deferral or a forbearance, that you have to, you know, sign a letter, usually put up some sort of legal deposit potentially, and then start to work through, you know, what you are collecting at the property and what they plan to do to give you the relief.
Thank you.
Matt, real quick on that.
Oh, yeah.
Matt, so the difference on the different lenders that, you know, you've talked about, CMBS, the banks, the insurance companies, you know, I know we've talked about this a little bit, but I know a lot of the clients and talking to where they're just being just told no, like we're not going to talk to you. And they're just saying, you know, especially now, you know, it's only April. And like you said earlier, they expect those payments.
Well, most lenders said we expect the April payment. Mm-hmm. I mean, and it kind of goes back to the guys, you know, the tenants that asked for, you know, abatement week 1 of COVID.
Yeah.
I mean, like it's almost like it's too soon. So most lenders said, hey, we expect your April payment, and they have been proactively working on, you know, potential solutions come May if rent isn't being collected. Each one of the sectors I mentioned, CMBS, life insurance companies, banks, and the agencies all have different folks that you would have to potentially ask for the relief. And your banker or your commercial, you know, your mortgage banker would be able to help you and point you to the right people to ask the request to.
Perfect. Thank you. This one goes out to probably Ethan, Michael, and Brandon. You know, considering everything that's going on with social distancing guidelines and even Cal OSHA is stepping in, what does the future of your individual spaces maybe look like next year, 5 years down the road, if this is still a thing?
Brandon, you want to go first?
You could already see it as you guys go into the grocery stores. There's now arrows telling you which aisle to go down, which direction to follow, how close to get the customers. Yeah, I kind of, certain industries, like, I mean, how long before you feel comfortable going to a theater again, you know, on a big movie premiere? That's going to be it's going to take some time before we feel I want to sit in a theater with a bunch of other people.
So every third seat.
Yeah, it's going to be tough. And at every third seat, they're probably not making money, right? So that's the big issue. I've seen on the news that Pismo's is planning to open up soon, and it's going to be reservations only. And you have to, they're going to pull a lot of the chairs and tables out. But I don't know if under, with what tenants are paying rent-wise, that they can afford to do that for very long. If they're only seating half their customers, they're not going to be making money. Right now, and I was curious, I had a question for Brandon on your office landlords. What percent of rents did you get, or are you getting? I know in retail, it was a wide range depending on the type of center. It was between like 40 to 75% they're getting rents.
Well, I would tell you right now, when you talk about the office market, it's such a diverse tenant base, right? So with a lot of those tenants being essential, whether that be CPAs, attorneys, financial planners, certain medical sectors, obviously, one of the groups that's getting hit hard is dentists right now, and anybody tied to the dental industry, whether it be a dental surgeon or just your general practitioner, pediatric dentist, just because that's close face-to-face contact. And those tenants are, obviously concerned even once it's opened back up, having the right PP&E equipment to, stuff their face right in your mouth before they start working on your teeth or whatever you're doing, orthodontists doing braces, things of that nature. So there's some concerns there. I would tell you, much like the multifamily side, I think April, for the most part, most rents came in. I don't think there's a lot of tenants that can hang their hat on the fact that they can show a financial impact in less than 30 days. But a lot of the conversations with landlords have been to discuss, May, June, and July, and where they may see things trending and what can be done. And just like the lenders, the landlords are smart. There are going to be certain people that will try to take advantage of a situation like this, and there's people that really do need relief. So trying to handle that in an appropriate way, whether that be asking for additional financial information or profit and loss, so you can see some trends to discuss that, or if they even can provide some market trends on where they are today and what they project for the next 90 days. So landlords are being very smart. I think the thing that people don't take into consideration is that landlords still have expenses. And as a tenant, even if whether it's making a payment on a note on a property, and even if that property is free and clear, there's still taxes and insurance and repairs and maintenance and utilities and janitorial services and landscaping, and those buildings want to be maintained, because if you have tenants, even if they're paying a discounted rent, they're still going to expect that the weather's warming up, that their HVAC works, and that they can cool their space, and that when they go to the bathroom, there's toilet paper there. And even in the first couple of weeks of the quarantine, that was a big issue for office tenants, because a lot of restrooms are shared, and getting toilet paper was hard for individuals when you couldn't go to Costco and buy a pallet of toilet paper if you're a large developer and have lots of locations. So, we've worked through a lot of different things. But right now, I would say that most tenants are able to pay their rent. It's going to be May, June, July that'll be very interesting to see if that percentage goes up. The conversations are being had, but I would say for the most part, much like the multifamily sector, we've seen people paying their rents and doing things. We have gotten a lot of notices, guys that had smaller tenants, individual office tenants. We've had a lot of tenants giving notice that we're on month-to-month leases, or had leases coming up. We've also been working through lots of renewals over the last 3 months, and I would tell you probably 90% of those renewal tenants that we've talked to have just said, hey, we want to put it on hold, and we'll stay month-to-month until we see how this pans out. And I think the unknown is just what everybody's waiting to figure out. How's this going to affect us, our industry, and our employees? We've heard stories of employees just not being willing to come back to work, for the safety of their families. And, you can't blame them for that, but those are things that are impacting them. But right now, I would say for the most part, most office tenants are considered to be essential and are being able to work in some capacity, whether it be remote from home. And I think the long-term conversation is going to be, will companies start to have more people working remote from home, as opposed to leasing office space to have them occupy space, or some percentage that is always remote, so that they'll never be down, or maybe not as impacted if there's ever a situation like this in the future.
And then for industrial, you know, a lot of industrial businesses, the processes that they're using, the employees are spaced apart anyway. I mean, if you picture a construction site, for example, you know, generally, I mean, it's outside, number one. You tend to see those workers fairly far apart. You know, in a food processing environment, a lot of times those workers are already using sort of some face covering. They're having to do that, especially in any kind of federally inspected or some type of controlled environment facility. But I think that for industrial businesses, the trick is going to be the PPE, and you know, which is a term that probably none of us knew about 60 days ago. When an employer or the employees can readily get the kind of gear that they need to either feel comfortable themselves, or the employer can provide it and provide a hopefully a safe work environment, it will allow the employer to make less adjustments to some of their processes. You know, if you think about a warehouse facility, the racking is in place, it's bolted to the floor, there's equipment that, you know, costs tens of millions of dollars that you just can't move it 6 feet further apart. So I think as much as employers can adjust their processes on the industrial side of things, they will, but a big part of it's going to be the employees feeling comfortable that they're not going to get sick, that they can wear a face mask that isn't, you know, made by their friend who, you know, can sew. And, you know, so that's a big deal. And right now they can't get access to that kind of equipment. So it's pretty clear to me that employers will look for ways to change how they operate their facilities, but it's going to be industry by industry specific, and it will probably lead to less productivity in the near term, which, you know, from an employer's perspective, less productivity means less things get produced, and it takes longer to make them, it costs more. So in the near term, those costs probably can't get passed through to the end user, you know, which is going to result in less profitability. But, you know, again, this kind of comes back to just the unknown. When can you start to get people back in if you're already not in an essential business? And when can you protect those employees? How are you going to do that?
Edward, if I can make a comment, listening to this, when talking to the owners, what they've been doing in terms of maintenance, if a tenant has an issue, before you would just knock on the door and go on in, well, there's a whole host of issues that have to be worked around. So a lot of times the tenant will set a time and a date, and the tenant will be gone. Maintenance guy goes in, has the proper PPE, you know, protocol, does the repair, cleans as he goes back out. So that's created some issues. We don't live in high-rise buildings where you have elevators, so it's all garden style, so you don't have that concentration where people coming and going through the same areas. But most leasing offices are closed, and they are only available by appointment only, and most of that's done digitally. A lot of the better companies have moved to touchless or basically all online leasing process. If it's a vacant apartment, you'll find managers taking their phone and FaceTiming it through the unit so a tenant can have an idea of what the apartment looks like. What's interesting on the deal side is that we've had like partner engineering, appraisers, inspectors. How do you deal with that if you've got to inspect the building? Well, what we've been doing since this started is that if, for example, you need 1 unit per building, 12 buildings, so you need 12 tenants, is that we've been cutting deals with tenants who have smartphones, which everyone does, and then the engineer and or appraiser would then log on with that tenant, and the tenant would walk that appraiser through the unit basically via the phone. And then the tenant says, whoever the inspector is, can you open that door? Yeah, I'll open that door. Can you lift it, raise in? So we've adapted. We find a way of not having to deal with the fact that we have to have an issue of going into the unit. So where there's a workaround, you know, we figure it out. So that's, you know, the brave new world we work in. Buyers on the deal side all understand you're not getting none of those units. If it's a vacancy, great, we'll get you in. If it's occupied, all bets are off. No owner wants the liability. No agent wants that liability. So we've all adapted. And at the end of the day, it's not going to change that much. What some of the inspectors, what they're doing is they're passing out like a checklist sheet, giving it to the tenant. Do you have, how are these things? Anything here that doesn't work, check the box. So, and that gets handed back to the manager, and the manager either takes their phone, takes a picture of it and sends it, texts it to the inspector and or appraiser, whoever made it. So in those situations, you know, we've adapted as well in this post-virus world.
Thank you. And if I could just ask Brett one last question. Are there any bright notes to look forward to? Are there any opportunities that, I mean, banks may not be giving loans, but is there anything we can maybe, are there opportunists out there?
Yeah, I think, you know, I agree with what, you know, Ron is saying, that there's going to be opportunities. There's no question. You know, it's in a time like this, there's going to be opportunities. I think a lot of what I was talking on is that's the crushing impact this had so quickly. You know, like, you know, Ethan making that comment, you know, who knew PPE was? You know, a lot of what has happened so quickly that we have all come to understand or not understand is going to create opportunities. It's going to be when things kind of start settling that we figure out what those opportunities look like, and understanding, you know, what tenants are paying rent, who is paying rent, and, you know, understanding again, you know, how the lenders are going to be looking at these multi-tenant assets. And, you know, I think once there's more certainty of understanding the overall situation, I think we're going to see a lot of opportunities. And I agree with Ron said, it might not be in 2020. You know, it might be more like the 2021 timeframe, where you're going to have more people that are looking to get back into it, feel more secure. And as I said, and I think he touched on too, is there's been a lot of cash on the sidelines, a lot of cash, and the lenders aren't going to be what 100% impact the ability for investors to buy real estate. I think what it's going to do is just help people understand how to value the assets, because you're going to have sellers who are going to want to turn over a rent roll and say, here's my rent roll. Well, a rent roll no longer has as much impact as, okay, let me see your, you know, tenant ledgers. Let me see your, you know, your delinquency reports. Let me understand who's paying, not paying, you know, tenant interviews. So I think that, yeah, there's going to definitely be opportunity, and I definitely see it, if not towards the end of this year, going to be more into 2021. And what those are like, that's going to be anybody's guess of, you know, what impact we all see when things start opening back up.
Thank you.
Well, yeah, gentlemen, I think that's our hour. I don't want to keep you over, but I just want to thank you for sharing. And, you know, it looks like, you know, next week, I was looking at my calendar, next week is May 1st, so the Fridays. So I think that's going to be a key date, I think, from what I'm hearing from you guys, as far as people meeting their rent obligations. So open moving forward, we can do this again, maybe in the next couple weeks, if you're open to it.
Sure. Absolutely.
Yeah, great.
Well, gentlemen, have a great afternoon. Thank you so much.
Thanks, guys.
All right. Thanks, guys. Good to see everyone. Be safe.
Take care.
Take care.